Hey guys, this is the fifth episode of the Will and Cody Show. Last week we talked about GME, Wall Street bets, and just the craziness of the economy at the time. We survived. I think we're all good. The economy still exists. So
yeah,
that was
the world did not
crazy.
fall apart.
Yeah, and but some crazy things happened. I think GME is still up a good bit. It's around $70, so it's went down a lot, but definitely not where it should be. And then of course, Dogecoin and all the other meme stocks are still kind of doing some crazy stuff. But today we wanted to talk about insurance, specifically life insurance. I'm going to let Will explain a little bit about what insurance kind of means to us, and then we'll jump right into the life insurance. So Will, you want to go ahead and take it from here?
Yeah. So there could be a little bit confusion on maybe what types of insurance we're looking at, what even insurance is, how much you should have. And so very basically, I think of insurance as just transferring risk on things that I can't cover or I won't be able to cover. So think of it as really big things that maybe you wouldn't have in an emergency fund, or you wouldn't just be able to pay out of, your monthly kind of budget. So these would be really big things that you wouldn't be able to cover. And so all you're doing is you're paying money, it's called a premium, to an insurance company in exchange for them covering a certain amount of that risk. So there's varying amounts, of coverage when we talk about life insurance and what that, would be needed for. But just think of it as moving it. And so they're taking the risk and you're paying them some to, hold that risk so that you don't have to bear it yourself. Because it's usually for really big amounts, when we talk about life insurance or, things like, health insurance, car insurance, home insurance, or renter's insurance. Those would be big things if, the worst were to happen. And so all you're doing with this is you're paying money to have someone else take care of that risk for you. And so that's why I really like those types of insurance. And so today we're kind of zero in on life insurance. That's a big one. Can be, I think, the highest dollar amount maybe of insurance that you get. And so just want to kind of focus in on this and maybe provide a little more clarity. But I think the biggest thing is, you don't need insurance for a lot of smaller things. That's why we, again, we like emergency funds. We talk about that all the time. But I like that for the small things that come up randomly. That's not what I want insurance for. I want insurance for the big things that I can't cover. That's why I would want it. So,
yeah, absolutely. The emergency fund for me is like, it's like what you said. It's kind of like insurance to myself, and then it's kind of like just a line of credit kind of that you can kind of pull from for an emergency, something small, something that's 3 to 6 months of your expenses, but that's not going to cover everything, especially in health insurance, car insurance. You have an accident, you get sick, something like that. That's not going to cover it. We wanted to talk today about life insurance, and what life insurance is. Basically, when you die, if you have a life insurance policy, a beneficiary gets a lump sum of money that you agreed upon when you wrote that insurance contract. And all you're doing is just giving that insurance company a little bit of money every month, depending on the policy. And then if you die, either through your entire life or through a certain term, a certain amount of years, your beneficiary gets a lump sum of money. One of the reasons that Will and I love life insurance and think everybody should have it is especially if you have a spouse or a dependent, somebody that is solely dedicated or not dedicated, dependent upon the money that you're building, that income. And so what we recommend is if you were to get life insurance, to try to have something around 10 to 12 times what your yearly income is. There's some variance to that. We'll talk a little bit more about the details about why, but the general gist is if you died, then somebody could take that lump sum and go invest it somewhere that was getting roughly 8 to 10% annually. And if you look at our past podcasts about investments and indexes, the S&P 500 does, I believe, 9.8%. So that's a pretty realistic investment to achieve. That way, that dependent now has a source of income that is similar to what you were bringing in, and it's almost like you're still there with them. And that way, when you leave, you are still taking care of your significant other or your dependent. And that's why we say if somebody depends on your income, even if you are working part-time or they're working full time, you're working part time, or you're working full time, they're working part time, if they're still depending on some form of income, you need to have life insurance.
Yeah. So I think that'd be the main thing that we think about is just replacing income is a huge part of it. Another smaller part, so it may not be as big, it's just, it's it's an unfortunate thing, but during the time of death, it could be a very expensive time. There's a lot of costs associated with that. So I would say that maybe is the second thing you need to consider, as well as, you want to be able to replace your income for those dependent, totally agree with what you said. And then also look at, what expenses might be during that time. Because again, it can be pretty pricey. So wanting to make sure things are covered, because that could be a big burden on somebody. They're already trying to go through the hardship of losing a loved one, plus having all these bills and things. So that's kind of the twofold kind of purpose I see of life insurance. And there's a lot of different kinds. And I'm actually going to be working on a blog post to go a little more in detail than we're able to get in a podcast setting on a lot of these different types of life insurance. But I'd say just your main ones that you'll probably run into is just a term life insurance and then a whole life insurance. Those are kind of be the main two. There's a lot of different variations on those. Again, I'll get that into those in my blog post. But as far as the difference between the two is, think of just term as it's only for a period of time, whereas whole life covers the remainder of your life. So term can be, varying years. Usually it'll be about, 10, 15, 20, or 30 years. So you're basically paying for a certain amount of coverage for that window. And then once that time comes to an end, after so many years, and then, the coverage will end. So you can either buy more, whereas a whole life policy will just continue on through, the rest of your life. It'll cover the remainder of your life. And there's different pros and cons, and then there's different, additions and riders and things they add on top of that. But I'd say just from what I've seen, and this is just generally, what I've, kind of seen in different people is like, for most people, term is a really good option. Every situation is definitely different. But I'd say in most cases, it looks like term is the cheaper and better option versus a whole life policy. And that's not saying that that's, every circumstance. Because I'd say maybe for like 5 to 10% of people, maybe whole life is the way to go. But as far as what I've seen, close to 90%, it seems like term is the better way to go, just from the value you get. And then, because it's just a lot cheaper, you can do a lot more with, the difference. So it gives you a little more flexibility with that as well. But again, every kind of circumstance is different. But I'd say do the research on those two different kinds. And again, I'll come out with a blog post on, the specifics of each one of those and all the different variations of that to maybe help out. But at least to get you started on researching, if you're looking into it, usually got the two kinds, the whole and then the term.
Yeah. And it just depending on where you are in your life will kind of depend on what kind of insurance you need. Let's say you're kind of late in life and you just want to cover expenses when you die so your family don't have to worry about it. Then whole life is probably the best bet because you don't know when you're going to die. You may put out 10-year term and think, okay, I'm going to die in 10 years. You may not. And then that day after the 10 years, you're not covered, and that's a burden on your family. So, in that case, whole life may be the best. But generally, whole life is way more expensive. For me, on the current coverage I have, it would have been close to 15 times what I'm paying now per month to get whole life instead of term. And there's a huge, opportunity cost there. I could really put that money towards other things. And so the logic for, say, someone my age is to have some term insurance to cover that income that I was talking about, because that's my goal, is so my wife can continue getting an income stream when I'm gone. That's my goal for life insurance. And so with term, I have a much greater margin on my budget than if I had whole life. I'm talking, 20, 30, $40 instead of hundreds of dollars a month coming out of my pocket. That could be invested towards my Roth IRA that could be invested towards my 401k, even just a standard mutual fund investment, or anything else like your house, throwing that extra into your house. The goal is, for me personally, I've got 30 year. In 30 years, I should have a net worth of at least what my current term life insurance policy is or more. And the idea is, once that happens, I don't need it anymore for that specific goal.
Right.
Because now my wife could be taken care of. She could sell the house. She could, take out of the IRA if she absolutely had to, or pull out of the IRA to be able to pay for it, or just so many opportunities and so many things. And obviously, you should go to a financial advisor for that kind of decision making. But that's the goal. That's why I have. And then she has it as well in the same thing, because she has a portion of income, and that would help me as well, right? And if we have kids, then that would change, and so forth and so on. So you need to decide, like, what is life insurance supposed to do for you? Everybody needs it, but what is the goal with it? Right. And so for us, someone our age, and I would say about 90%, like you were saying, it's going to be a term just because of that savings. And then their ability to take that savings and invest it somewhere else. Because, I mean, I'm not kidding. It's around 15 times
it's
for
a lot,
me.
Yeah.
Like, that's a lot.
Yeah, I think mine would have been about 10 times more,
Wow.
per month. So it's, it's quite a bit, more. And so I think, it's different ways of thinking about it. And I think you put it really well as far as like, what do you want to get out of the insurance? And that's, kind of your strategy. So, I can think about it similarly of, I just have a window of time, as you mentioned before, between now and when my net worth is enough to kind of what we call self-insure, which is basically you're covering that big risk because you already have your net worth is so high, you don't have to, worry about that. Whereas someone else may have different goals, and they may say, I want to cover, maybe some of the taxes as far as, the transfer of my estate down to my heirs, or I, have more long-term goals that I need. So that may change it a little bit. But for me personally, I take a similar approach to you, Cody, where I said, hey, there's a window of time between now when, if, hopefully not, but if something happened to me now, I don't know what my wife would do, versus the time later where maybe we have enough saved and invested where she could just live off that. But there's that period of time that I want insurance for. So that's why, term was a better option for us, but that's kind of the approach I had to investing, or not investing in, insuring. But some people may think of it differently. So I know plenty of people that say, I don't see a time where I ever wouldn't have life insurance, just because there's a lot of different benefits to it. So, each person kind of can have their own plan for how they think about it. And I think you can kind of plug and play with the different kinds of insurance to kind of better fit, the needs that you might have. So, don't take it as, and in my opinion, it's not perfectly a one size fits all. I think it's a one size usually fits most, but not automatically a one size fits all. And that's most things in finance anyway, in personal finance. There's things that usually work for most people, but it's, not everything is perfect for everyone.
Right. And I don't want to discredit, whole life. I mean, it has its purpose. The one thing that we do want to warn, though, is most salesmen make a better commission off a whole life than a term life. They make a lot. And that's what my financial advisor was warning me.
Yeah, specifically like cash value policies. That's a whole other thing we could get into. But you just look at the return of it, and then some of the loopholes and different things. So that's a whole other thing. But
and they'll put out they'll say, well, technically this is an investment. They'll like you said, the cash value, or they may have a small, a little bit of interest rate attached to it. And they'll say, well, you're investing too. We don't recommend that. I don't like having my insurance and my investments in one place. I just don't advise that. Like I said, whole life has a place, but be careful when somebody's trying to pitch that to you. Let's say you're in our shoes and you're just trying to get some coverage to be able to supplement your income for your spouse, or for a dependent in case you pass, and they want to say, well, you need whole life then. Think about it. Don't let them push you into a direction just because they're going to make a better, commission off of it. Choose something that's actually what's best for you.
Yeah.
So be warned that that is a strategy of theirs, is to push a investment. But you can do the math with the interest rates they give you. You
Hmm.
can ask them, and they'll say, maybe it's like 1.5%. But we know that you can get 8% or 9 or 10% with just an index fund. And so, just doing the math with that, just taking what you saved by having term instead of whole and investing that in something else,
Yep.
just a mutual fund somewhere, just plug it in a calculator. It makes, it makes sense why that's a good option.
Yeah, yeah, no, I agree. I'm similar mindset where I usually don't like to mix the two, and I know there are some benefits. Like I know you can look at some people with a really high net worth, and there can be different ways you can use insurance in the whole estate planning game, and and how to set everything up. But usually as a rule of thumb, I would say I don't like those things to mix. I usually like to keep them separate because for
Hmm.
me, it's all. I like to have a purpose for everything. I don't want to just have it just to have it. I want to know why I have it. So I have insurance for one thing. I have investing for another thing. If that makes sense. So,
Yeah. Yeah.
there are things that combine it, but for me, I want to know exactly why I'm getting that one thing.
Hmm.
So that's why I like keeping it
Yeah.
separate.
And
And
I
then
mean,
I
like,
think, go ahead.
oh, sorry. I was just
Yeah.
was going to say, like, you know, it isn't a one size fits all, and whole life does have its purpose. I'll give a quick example. My dad put out or had whole life policies for every one of his kids the moment they were born. It was really really cheap because they're babies. Their
Mm-hmm.
life expectancy is pretty high. So he was able to get a really cheap cash. I forgot what you call it. It's cash.
Cash value.
Cash value policy on us. And then by the time we turned 18, the policy went over to me, to the kids. I sold the policy, got my term life, and then the amount that was in that cash value turned into my emergency fund during college.
Nice.
And so that was a great idea. And the amount of money he put in was not a lot. It was reasonable for him, and it really worked out because he doesn't need to have life insurance on a kid. I'm not benefiting. I'm not giving income. But his thoughts was, I think it was like 50,000 or something. It was going to cover a burial. It was going to cover
Right.
the
Right.
whatever attached to your child dying. Anything
Mm-hmm.
else after that, maybe a little bit of supplemental income for mourning, things like that. So awesome. That makes total sense. And then when your child turns 18, sell it, give them term life. So there's a really good example of why whole life can be good.
Right.
But in our case, if you're a young adult, be careful.
Yeah.
It's not for everybody.
Right. Yeah. So do your research. Look into it. And so I think you mentioned this earlier, Cody, but usually a good rule of thumb is about 10 to 12 times your income. That's
Hmm.
usually about it. I'm just going to say I personally actually did above that because, just looking at kind of the math of how long it would take us to get where, we'd be close to, being able to self-insure, it might take a little bit more. So that's why I just got a little bit more just in case. And it was the worst case scenario of if something happened to me today, which, my wife hates talking about it. And I don't know about your wife, but she doesn't want to talk
Yeah.
about anything happening to me. But I wanted to be there just in case. So the coverage, if something happened to me today, she'd be okay. She could live off of the earnings of that and that principal from, and if she wanted to work still, she could, but at least all the burden wouldn't be on her. Help alleviate some of that, um, you know, for the rest of her life. So, and then future things down the road can cause that to increase. So obviously, if you're making more, you may need to look at, okay, maybe I need to bump up my insurance amount. If you've got kids, if you take on debt like a house, like a mortgage or anything else like that, that you may want to add on, to help cover some of that. That could also be
Hmm.
things you look at. So it may not be one stagnant amount for your life. So you maybe want to increase it slowly. You can add more, coverage on top of it. So, keep up with it because you want to make sure it's there. And then one thing I just want to say, I don't know if we can stress this enough. It's just the impact it can have. Because I know we don't like to think about it, but if you were in a situation of having a loved one pass, it's a very traumatic time. And it's a time where
Mm-hmm.
you a lot of times want to think about, you don't have to worry about all the little details and worrying about money and how stuff's going to get paid for. So it can be such just um, a relief to have this for your family, so they don't have to worry about it. They can
Mm-hmm.
focus on what's important. They can mourn. They can spend time with the loved ones that are still there, um, and without having to worry about, oh, I got to go back to work as soon as I can because, who's going to take care of the family. And so, it could be such a thing. If you have people that are depending on you, having this in place is a great way just to show that you love them and you're caring for them. And so that's one of the things that I really like about it. So yes, it does serve a purpose, and you can do the math on what you're getting and what you kind of need, but
Mm-hmm.
also just the confidence in knowing it's there. And so even if something happens to you, your loved ones are going to be taken care of. And
Yeah.
for me, that's a huge relief. Like,
Yeah.
you know,
Yeah.
knowing that.
I just looked it up. I wanted to make sure that I was making sure it was the right person that was saying this, but there's a phrase that Benjamin Franklin said, that there's always two things that are certain. It's death and taxes.
Yeah.
And you should always be prepared for both. We'll
Yes.
talk about taxes another time,
Yeah.
but death is certain. It's 100% certain.
Yeah.
So it is a tough subject, but you and your spouse need to talk about it. If you have a dependent, if it's just you, well, I can understand maybe not needing life insurance, but maybe there's somebody out there that kind of depends on you, maybe even just emotionally or something like that. That it's a conversation you need to have. And it's going to happen, and so being prepared for it, making sure that the people that you leave behind or someone else leaves behind, you can help them.
Hmm.
As you go on, it's something that last little gift to them as a way to cope with what's happened, and then a way to move forward with their lives and be productive. And
Yeah.
so,
Because they
uh,
may just need to take some time. That money
yeah,
just may help just give them time. And I think
yeah,
that's also a big thing. Another thing I wanted to mention, kind of similar along the subject, is having a will.
mm,
That's also another huge thing. Just making sure you have that in place and you have everything set up. Because I can't remember, it's one finance expert. He's always like, um, if you're driving out on a highway, you know how there's always going to be like potholes and different stuff that you're going to have to
mm,
like swerve around. And so he always jokes that like, um, you know, the government can sometimes have a tough time even just taking care of the roads. And so you don't want to leave it up to chance that your money's going to get to where you want it to go, in the
yeah,
same way of like leaving it up to the state to try to divide. So he would just say, I would much rather choose exactly where I want things to go, have it laid out in a will. That way there's no confusion. And also,
hmm,
it could be no strife or fighting about who
yeah,
gets what. That could be a big thing. And so just having instructions on, here's what I want done, here's where everything should go, it can make that whole process so much easier than the stress of, kind of a free for all of where does stuff
hmm,
go and then who's deciding where it goes and all that kind of stuff. And you can get stuff that's, you can get professionally done and it's pretty expensive, fairly pricey. But there's a few online places that I've looked at, and it's pretty cheap. And you can just go fill out
hmm,
everything you need. It's an easy form that you can fill out, and then you just get it notarized, and can have that set up. So it
yeah,
it it shouldn't be an excuse. Maybe set aside some money over a few months to pay for that. But it's something you should have, for sure. Even as Cody and I joke sometimes about, like, our net worth is so small right now. It's like, what are
yeah.
we dividing up? But I still, with what I have, I want to make sure it goes where I want it to go, and at least have a plan for that. So I don't know, Cody, if you have any thoughts.
Yeah, I
But I
mean,
just think it's super important.
it is, and I've seen firsthand families go through tough times with a family member, leave them, and the will either wasn't done right, it wasn't notarized, or the will just didn't exist, and
Mm,
it was just very difficult for the family, and it took months for them to figure out, for the state to figure out who gets what and how much, and only the person that owns the money knows what's best to do with that money.
right.
and if they're in their right mind, and that's what a will is for. So yeah, find some time, sit with your spouse, and write up a will, and then you can have it done with a lawyer. Like you said, it could be
Mhm.
expensive. You can go to, I think it's LegalZoom and Rocket Lawyer and all those other websites. Just Google
Yeah.
how to do a will online.
Yeah.
And
Real quick, one that I found, I think it's called Mama Bear. It's another one that I
I've
saw
heard of
was
that
really
one. Yeah.
good, but the ones you mentioned are good too. So there's plenty of places you can go.
Yeah, and it's not hard. It's just it is a little time consuming, and it's that thing that we always just push back, and
Right.
I'm
Right.
guilty of that
Yeah.
myself. So, but it's yeah, it, you don't. I've seen it firsthand.
Yeah.
Families just have that struggle, and kind of like the life insurance. Imagine leaving and not having that life insurance. What is that? How is that going to impact? How can you make death better for the people you care about?
Yeah.
And the best way to do that is with life insurance and a will.
Yeah.
Unless you have like a large estate or something. But I'm talking for the general people like us.
The average
It's
Joe
the
like
life
us.
insurance and the will, and that's all you got. Maybe like a
Yeah.
nice, I don't know, like computer or car or something. I don't even
Yeah.
have that. So
Yeah. So yeah,
but yeah,
I think will can help out a lot. And then I'd say the way I would just think about it, I think we got a little more time, Cody, we can go into it. But I would say if you have dependents, that should be a huge priority of your will, obviously. So I kind of have it set up, where if something happens to me, goes to my wife.
hmm
Easy, done. So we don't have any kids right now. Because then if we had kids, something, hopefully not, but something happened to me and the wife, then we can look at, okay, how do we take care of the kids and where are they going? That could be a big thing as far as kids of, um, who's the guardian of these kids now.
hmm
I wouldn't want that taken up to chance of who gets them. I want to make sure I know where my kids are going, if something happens. So we didn't
Yeah,
have to set
absolutely.
all that up yet. So ours is kind of simple right now. I'd say if you are somebody who doesn't have any dependents, so you maybe, you know, don't have a spouse, don't have any kids, they're kind of depending on you. You're just kind of like, hey, it's just me. What do I do? I'd say look at those around you who maybe, maybe you could just be a blessing to and just,
hmm
help during that because it's like, oh, wow, that's, unexpected for them. Or look at charities. That's a big thing that people will do
Yeah.
is they'll put a charity or some sort of organization in their will, just if you want to support them, and that could be a great way to be a blessing as well. Um,
Yeah.
it's kind of a good way to end if you don't have a lot of you know people to pass it down to. It's like let it go help others.
Right.
So I'd recommend that. A lot of good charities out there that you can give out to. So that's kind of how I think about it. Who are your dependents, and then if you really don't have much under there, help it to be a blessing, and then give it, give it out,
Definitely.
stuff out if it doesn't need to be passed down or anything like that.
Yeah. And if,
So,
if your life changes, something happens, you have a kid or you adopt a child or just somebody comes in your life that means a lot to you, go update your will.
yeah,
That it's
yeah, make sure it's
it's not
updated.
hard. Just update it. Constantly update it. Be thinking, put a reminder on your phone and say, every month reevaluate your life and then say, okay,
Yes.
what has changed? Do I need to change my will? Things like that. And it's not hard.
Yeah,
So don't write a will and think that that's just the will that'll exist for 30 years.
right,
You could have two kids and now that will helps them none. Just
right,
constantly, keep thinking about it. You don't have to always update it. Only update it when you have a life change, right?
right,
But
right.
be thinking about it. Always be
Yeah,
thinking about that, and it'll help you. It'll help your mindset. Yeah,
yeah. I'd say will, and then any insurance as well.
yeah,
Any of those can change, as life events happen. So it's not necessarily set it and forget it. Some may be more than others, but keep looking at it. You may need to make changes, to all those things. And so, as you mentioned, you wouldn't want to set it and then something happened. You have, more
yeah,
kids or something, you get married or something, and then it's not set up for that now. So you want to make sure you're updating it as you go to make sure it's, of best use,
mhm,
whenever, it
absolutely.
would actually be needed. be
And
part of use. So.
there's varieties to the will, and we'll probably I'll do a blog post after Will puts out his insurance one. We'll go into Will's a little bit, because there's a living will, and there's
trusts
a lot of
and all sorts of different things.
And trusts, and there's so much to it. So we just kind of wanted to give you inspire you to look into a will, look into life insurance, and see how it could benefit you and everything. So
yep.
Will, I think that wraps it up. We're about at that 31 minute mark. So but we appreciate you guys listening. That has been episode 5 for the Will and Cody Show. We're going to keep doing this. We really enjoy it. If you've got any questions, hit us up on social media. Go on our website, www.willandcody.com. You got any questions, you want us to look at your budget, you want to just chat, I mean, we'll have you anything on the podcast. We'll just chat anything. We might one day talk about football. We'll talk about that really boring Super Bowl we saw yesterday. So we don't have to always talk about money. But anyway, we appreciate you guys listening, and we'll see you next time.
See you guys.